If you've been following this channel for at least a year, you would know by now that the majority of my cryptocurrency wealth is stored in Ethereum. Not Cardano, not Chainlink, not Solana, not Polkadot, but Ethereum. And that is for good reason. So today we're going to break down why my portfolio is allocated the way that it is, some other coins that I'm looking at, and why the strategy has performed so well. Now, as I've said, if you've been here for a while, you might know this already, but my portfolio is broken up into two parts, a HODL portfolio and a trading portfolio. And it's a very simple split. 70% HODL, 30% trading, and within that HODL portfolio, around 90% is allocated to Ethereum. There was a point when this allocation was much lower, around 60%, and I had 40% allocated to Bitcoin. But just over a year ago, I made an announcement that I would be selling most of my Bitcoin for Ethereum, and I did just that in the hopes that Ethereum would outperform Bitcoin, which of course it has done, and it's very expected during a bull run. Now, the 30% trading portfolio that I have here consists of pretty much every coin I've ever looked into, every coin I've invested in myself, I've spoken to you guys about, I've mentioned. Any low caps, micro caps, medium caps, all go on in this trading portfolio. All the swing trading, everything happens here. This HODL portfolio is hardly ever touched, except on some very rare occasions where I see a major opportunity upcoming, whether it's a huge news event, something that people are looking forward to, and I may dip into this HODL portfolio, but only slightly. And once that event has passed, or once that opportunity has passed, I very quickly trade it back into my HODL portfolio. This trading portfolio is the one where all the chaos, all the madness, all the trading, and all the speculation goes down. Now, that's what you have to define. What kind of person are you? What kind of investor are you? Firstly, are you an investor? Do you invest in things and hodl and wait them out? Or do you like to trade? Are you a short-term trader, mid-term, or even long-term trader? What sort of trading do you like to do? Do you like to flip things? Do you like to trade between coins? Do you flip back over to USD? What do you do? These are all the things you have to take into account when you want to define what kind of person you are and what you look to gain from this market. Now, because I'm an active participant in this market, I have a HODL portfolio. That is where my wealth is stored. That is where my money goes. That is what I'm holding for the next 10, 20, 30, 40, 50, 100 years. My trading portfolio is where I speculate. It's where I play. It's where I swing trade. If I lose money in this trading portfolio, it does not matter. It doesn't hurt me. It doesn't hurt my family. It doesn't do anything to me. All my wealth is stored in this HODL portfolio. And now, if you are a trader, if you're someone in this market and you want to make short-term trading money, you need to have a HODL portfolio. If you don't, you're simply making a bad decision. Trading without any sort of backup plan, any nest egg, any HODL portfolio is a road to ruin unless you're very, very experienced and know exactly what you're doing, which I don't believe anybody does. At this point, everyone is a speculator, everybody is trying to outperform somebody else, and there will never be one true winner. Of course, there will be some investors who are better than others, but at this point, you need to have some security, right? And if you don't, you're simply a gambler. Now, to show you why my portfolio is allocated the way that it is, we're going to head over to CoinGecko and take a look at some of the cryptocurrencies here. Now, as I said, I traded most of my Bitcoin for Ethereum, and the reason being is that, of course, Ethereum was going to outperform Bitcoin, and we can see that here on the chart. If we expand back and we take a look at what Bitcoin has done over the past year or past 2 years, March 2019, $4,000, currently sitting at 60K. That's a major performance and major growth in US dollar terms. However, if we change this view, if we change it from US dollars, which is what it's currently said here to main, to ETH, and we measure Bitcoin's performance in Ethereum, you can see that there was a point, of course, where Bitcoin was outperforming Ethereum up until around the 4th of September 2019. But since that point, it has simply been depreciating against Ethereum, meaning losing value against Ethereum. Now, this is simple to understand, meaning that if you had simply held Ethereum instead of Bitcoin, you would have gained US dollar value. And this is the case with a lot of cryptocurrencies. One in particular that we're going to take a look at today is Chainlink. Now, Chainlink has had a lot of people complaining about it recently and not performing as much as other coins in the market, and people getting a little frustrated with it. But again, we need to zoom out slightly and take a look at what Chainlink has done over the past year or so. Now, on the 25th of June 2020, Chainlink was $4.71, currently sitting at around $31 with a peak around $50. Meaning that at one point, Chainlink had done a 10x gain in US dollar terms. A fantastic investment when compared to pretty much anything else, maybe outside of cryptocurrency, right? Within crypto, of course, there's going to be things that perform better than this, but outside of this, that's a fantastic gain. That's nothing to scoff at. But if we take a look at it in Ethereum terms and see what Chainlink has done against Ethereum, we can see that it did in fact, gain against Ethereum up until the 17th of August 2020. And since that point, it has lost value, lost and depreciated against Ethereum, meaning that if you had held Ethereum from this point, you would be richer right now in US dollar terms than simply holding a cryptocurrency portfolio. And this is why an overly diversified portfolio is not the best idea, meaning having tons of different coins. If you have just one portfolio, you don't have a hodl portfolio and a trading portfolio, having just one portfolio with tons of different coins in it, you can't track performance very well, and you're much better off simply holding Ethereum, holding Polkadot, holding Cardano, holding one single coin, right? Now let's take a look at some other coins as well. Maybe we take a look at Cardano, a favorite of this channel, one that I have swung trade many times, made some very serious gains on. In US dollar terms, performed fantastically, right? From the beginning of Jan 2021, that's this year, to this point, fantastic, major gains. Let's compare that to Ethereum. From that point, we have had some major peaks and troughs against Ethereum, meaning there have been points where it has outperformed Ethereum and there have been points where it has underperformed Ethereum. Now, what are these peaks for? What are we looking at these peaks for, and why am I highlighting them here? These peaks are profit-taking opportunities if you are a trader. If you're a hodler, you simply buy, hold, look away, come back in 5-10 years, whenever you're looking to come back, depending on what your time horizon is. But if you're a trader, if you're looking to swing trade, if you've got some allocation to blue chips and some other cryptos here in your trading portfolio, then these peaks, when these coins start outperforming Ethereum, those are profit-taking opportunities. Now, what do you do with those profits? You take those profits here from, for example, blue chips, Cardano, Chainlink, whatever you're allocating here in your trading portfolio. You take those profits and you allocate them back to your hodl portfolio, and you don't sell them. That's what these peaks are for. If you simply allocate within this trading portfolio to blue chips like Cardano, Chainlink, Polkadot, whatever, and you don't take profits, you're simply hodling through these peaks and these troughs for no apparent reason. You're simply just hodling as a passive investor and not paying attention to these insane profit-taking opportunities. And this goes with many cryptocurrencies, whether it's Cardano, Chainlink. Let's take a look at Avalanche. Avalanche is one that is very special. In US dollar terms, Avalanche has done fantastically well as well, from $2.91 in December all the way to close to $80 right now. In Ethereum terms, let's take a look at what it has done. It has had a peak, an opportunity for fantastic profit-taking gains. It started to outperform Ethereum. You keep an eye on it. It's outperforming Ethereum. You start taking some profits and add it where? To your Ethereum hodl, whatever your hodl portfolio is, whether that's Bitcoin, Ethereum, whatever it is. Then it starts depreciating against Ethereum. Then we have another spike. We have an opportunity for profit taking. Now, I'm only showing you these larger cap coins, but this is the case with many cryptos, whether they large, medium, or small cap. There are points where they pump against Ethereum, where they accelerate growth against Ethereum. These are profit taking opportunities, and that is how you allocate your portfolio, right? We are heading into possibly the tail end of the cryptocurrency bull run now. Now, of course, we might have a super cycle. Maybe we have an extended bull run. Who knows? No one knows. This strategy no longer works perfectly. We don't have time to manage all of these peaks and troughs and reallocate over to our hodl portfolio. So what do? We add an additional portfolio, which is our cash portfolio, right? You take these profits, whether it's in Ethereum, blue chips, or whatever, and you allocate those profits to your cash portfolio. Now, your cash could be actual cash going into your bank account, or it could be something like a stablecoin, UST, USDT. I don't want to use the others because they are centralized. UST is probably your best stablecoin, right? And you reallocate to these stablecoins or to cash because you then have an opportunity to either buy further dips in the bear market, or when we do see an extended lull in the market, you can add to your cryptocurrency portfolio, your hodl portfolio, and you take profits here when we see pumps in Ethereum over to your cash portfolio. This is a very simple strategy because time is not on our side any longer. There is not much time left in the market, perhaps, right? Now, I might be completely wrong. I might be completely right. It doesn't matter. All I'm saying is have caution. Be aware that there could be a potential end with a major lull in the market after that. And this is what we need to be aware of. Many people are expecting 10, 100x gains, and everybody's pumping these huge numbers out, expecting that these are long-term holds. Buying Solana now is a long-term hold. Buying Chainlink now is a long-term hold. That could be the case, but you're going to miss a major peak, a major profit-taking opportunity if we do have a blow-off top towards the end of this year or early 2022. Now, with that being said, let's take a look at some of the coins that have, in fact, outperformed Ethereum. Some coins that I've swung trade and I've mentioned on the channel within my trading portfolio. And the first of that is, of course, Luna, Terra. Now, I'm not going to go too much in depth in this because I've mentioned this many times on the channel now. There are some videos on it. You can go take a look at this. If we look at this in Ethereum terms, it has majorly outperformed Ethereum since the beginning of this year. From around the 16th of January, it outperformed Ethereum majorly to the point where it's simply basically at the same point that it outperformed since then. Two major profit-taking points where you could take profits at the top, reallocate to Ethereum or even to your cash portfolio, and then wait it out before you trade it back in. The same goes for something like Solana, a coin that has majorly outperformed Ethereum. Some minor peaks along the way that could have been profit-taking opportunities. Now, you might say, if I took profits here, I missed out. Or if I took profits here, I missed out on further gains down here. It doesn't matter. Don't worry about gains that you missed out. Don't worry about these small percentage gains that you could potentially have had. Think about what you've allocated, what you've already made in gains. I've had people messaging me over the past week saying that they're really disappointed in the fact that, actually just one person messaged this, that they're disappointed in the fact that I've said that I've made huge gains in Cardano and now they're losing money against Cardano because they don't know where else to allocate their money. That's not my goal. That's not my goal to tell you where to allocate your money. He made a 10x out of Cardano in the time that he's been in the market since the beginning of the year, but he's disappointed that he's lost money in the past few weeks. You've made a 10x gain. Take that and run. Think about that. You've made a 10x what your investment is. There's literally nowhere else you can do that. Be grateful for what you're getting in this market. I'm dead serious. Be grateful for the amount of money that this market is able to produce, and don't worry about the small percentage gains that you could have potentially had or that you missed out on. You need to understand that this is mostly a game. Mostly nobody knows what's going on in this market. They're taking what they can get, and so should you, because it's a fantastic once in a lifetime possibly opportunity, and you should be grateful for what sort of gains you can get out of this market. If you could have had a 15x but you got a 10x, what are you complaining about? It makes no sense. Then let's take a look at something like Harmony, another coin that has had a major pump against Ethereum. At this point, when Harmony started outperforming Ethereum drastically, this is what you need to look at, not the US dollar terms. Don't care about US dollar terms. Of course, these charts lined up at this point because it did outperform so greatly. But when it starts outperforming, not in US dollar terms, but Ethereum terms, use that as an opportunity or a signal to say, okay, this is getting overheated. It's outperforming Ethereum like crazy. Maybe this is a point or an opportunity to take some profits either into cash or into my HODL portfolio. Another one is Polkadot, a coin that I've mentioned very, very early on this channel, a favorite as well of the channel. One of the strongest performers, strongest ecosystems, huge development taking place in this ecosystem. Again, two major profit-taking opportunities. Now, this was before the split, of course. Polkadot did like a 1 to 100 split or whatever it was back in the beginning. But there was a point where it outperformed Ethereum before that as well, and there was a profit-taking opportunity. And again, here in the peak back early in March, you could have taken profits against some of these, against Ethereum, and you would be higher up right now than you would be against ETH. But this is still a very, very good hold against Ethereum. Why? Because we can see a change in trend. Now, this trough has started to form here, and you can see that it has slowly started gaining momentum against Ethereum. It hasn't outperformed Ethereum majorly like here. It hasn't had a major parabolic move against Ethereum, meaning that this could be a potential good hold against Ethereum as a hedge against Ethereum to try and outperform ETH. But again, you need to understand what your own risk factor is, what sort of risk you're willing to take on in the market. Are you willing to potentially get a few extra gains against Ethereum rather than simply holding ETH in this market? If not, hold Ethereum. What are you doing holding any other coins besides Ethereum if you don't simply have that sort of risk tolerance, or you don't have to squeeze every last bit out of the market? But there are some people out there who want to see if they can outperform the market slightly, and this might be an opportunity to do that. And finally, I want to mention Matic. Now, Matic is a very special coin, what I call a leveraged position against a certain other coin, right? And that other coin is, of course, Ethereum. Why? When Ethereum spikes, Matic will likely spike. When Ethereum gas fees go up, where do people migrate to? They migrate to Polygon. They start using Polygon. They start using cheaper chains. And because Polygon is very much tied to Ethereum, or as a side chain to Ethereum, a layer 2 to Ethereum, we can see that it has outperformed Ethereum massively since the beginning of this year, starting at a $47 million volume, market cap. Let's go over to market cap. Starting earlier this year at a simple, very, very low 142,000 ETH market cap. Let's actually switch this over to US dollars so we can take a look. At $162 million market cap to currently a 12 or even $13 billion market cap in the span of 1 year, it has massively outperformed Ethereum and will likely continue doing that for the rest of the bull run. Now, there was a period, of course, where we had this major lull or slow consolidation against Ethereum, but it's not terrible. It's not drastic. This was, of course, a profit-taking opportunity when it went parabolic against Ethereum. But since we have bottomed out from what it looks like, it's very likely that Polygon will outperform, or Matic will outperform Ethereum as we head into the tail end of the year. Why? Because retail investors are going to come into the space. They're going to start using Ethereum, realize the fees are too high. They can't use Ethereum. They're going to go somewhere else. Where is that? Polygon, maybe BNB, maybe Luna, maybe Cardano. Where are the cheaper fees? This makes perfect sense as to why people might look at something like this rather than Ethereum. But if you are a passive investor, a slow, long-term investor, you don't really have time to look at the charts. You don't have time to spot these peaks in the market. You don't have alerts set. You want to put your money somewhere. You want to sit around and wait and hope that your portfolio grows in value in the best way possible for the amount of effort that you put into trading or into monitoring your portfolio. Ethereum and Bitcoin are going to be your best bets. They're easy, they're passive, everyone knows what they are, they've got the most stability, probably the most security as well. Ethereum is likely going to be here for the next 10 or 20 years. It's going to be around, it's not going anywhere. Nations are adopting it, banks are building on top of it, huge financial institutions are building on top of it as well. It's going to be here, it's not going anywhere. So what I'm saying is, to wrap up this entire video, if you're looking to make a fantastic portfolio, what you should be looking is at Ethereum. And if you want to speculate, you want to play, you want to participate in the ecosystems, have a trading portfolio, but please don't allocate majority of your wealth to it. Look at certain coins that will outperform and have outperformed Ethereum up until this point. It might very likely continue to outperform Ethereum towards the end of this year and towards the beginning of next year. But if they don't, hey, at least you tried. With that being said, I thank you guys for making it all the way to the end of this video. If you did make it all the way to the end of this video, please comment fireworks down below. Comment the word fireworks down below if you made it all the way to the end of the video. As always, I shall see you in the next video. Cheers.